we need to talk about Tesla. Look at this move just from Friday alone, over 8% on the day, completely wiping out all the losses from the poor delivery numbers on Thursday. This is incredible, and personally, I see a potential trade setup this week that I'm going to talk about in this video today, along with a potential trade setup on Nvidia, because both look really similar from a momentum perspective. So I'll get into it right away. And just first thing, if we go to the calendar over here, this Thursday, by the way, we have off. So that is January 9th. That's in remembrance of Jimmy Carter. So keep that in mind. We've yet to have a full week in a couple weeks now, just because of all the holidays and then this over here. But just keep in mind, there is no trading session this Thursday. Regardless, going back over to Tesla over here, the first thing I always look at over a weekend after such a large move like this is if there was any complementing flow, not only for the move, but then also to see if there's potential for a lot higher or continuation from that move. Are they continuing to hold their position? So over here on Cheddar Flow, you can see on the historical flow tab, I have it filtered for both January 2nd and 3rd. And that's deliberate because those are the 2 days with the most activity. That's the post-delivery number day. Over here, January 2nd on Thursday, we had that big dump. It was down about 5% or so on the day. And then over here on Friday, of course, we had that subsequent rally. So if we go back over here, we can scroll all the way down to see on Thursday. And the first thing that I noticed when I was reviewing this was we didn't see much activity to begin Thursday. So all of this flow over here was within the first hour of Thursday, and there really isn't anything highlighted on Cheddar Flow here or anything that catches my eye. It really is just a mixture of call and puts overall, with no substantial amount of premium, all things considered. But as we scroll up, the first thing that caught my eye were these two orders over here, 500,000 order and a 600,000 order. Both were put sells, and not only any put sells, they were in the money put sells, which is pretty weird to see, especially with such a short duration expiration. This expired the following day on Friday, the weekly contract, and they sold these in the money puts at a spot price of 376. So at the time they sold these, it was near the low of day, believe it or not, of Thursday, because you can see over here 376 is right here, and the exact low of day was around 373. So they got it almost near the low of day. And with put selling, they sold these to open in this case, and they wanted to benefit on selling the heightened premium of these in the money puts. They got it below the bid at the time. And because they sold these, they were able to collect all of that premium by Friday when those expired worthless, because we had a huge upside move. It closed 410 on the day. So first of all, these orders are interesting to me, especially because we saw a lot of these. It wasn't just these two. If I scroll up, we saw another one over here for the 375 strike, same expiration, same kind of premium structure on it. Also, as I scroll up, another 375, same expiration, same thing all around. There were a couple more as well as calls over here with that same expiration. These guys were trading it. This guy was a little bit more directional, looking at that 390 strike, but all of these were bullish, and we saw these throughout the middle portion of the day while price was relatively dormant near the lows. After such a large dump, people were suddenly bearish on it if you looked at social media, yet we saw the underlying features of the flow were seemingly bullish. There really wasn't any large put order, all things considered, in terms of a directional bearish put order. These were bullish puts because they were selling them. So that was interesting to see, and we'll of course see it again in the future, whether it be on Tesla or any ticker for that matter. So something definitely you want to keep note of, especially if you see it in the future. But because of this, we did see them perform really well with that rally on Friday overall. And then based on Friday's price action, we did see some pretty large premium orders. However, these were one, super deep in the money strikes. So that's the first thing I want to mention. Then two, some of them had some far dated expiration. And personally, if it's super deep in the money, especially with the far dated expiration, it's relatively useless to me. Like this order here, yeah, it has 6.7 million in premium. Yeah, it has 2.9 million in premium, but something that expires in June of 2026 isn't that helpful for me, because I'm looking for like 2 to 4, maybe even 6 week setups. So if it expires in a year and a half, it just isn't that helpful, all things considered. So it's good to see that there's a lot more calls and these aren't puts, for example, but it doesn't really help me in the grand scheme of things. But that's something I did want to mention as well. The fact that these aren't puts, and we haven't really seen any directional puts throughout the last 2 days, it really is the only red here for the most part is call sell orders like this over here. That just tells me that's net bullish overall. Even these call sell orders, these were mostly call monetization orders. And we know that because we saw them add these calls the previous day. Look, 390 call above the ask for the 500,000 in premium, this 103 2025 expiration. This is obviously a trader because it only has a 1 day to expiration at the time they added this. So we see that monetization in the following day with them selling the same strike over here. And look, spot price is 399 at the time that they sold. The time they bought previously was 386. These performed really well. They bought these contracts at $1.93 contract. And then over here, we can see these went all the way up to $9.54 a contract. So huge trade on their part. And this performed really well. And you can see a lot of that monetization later. And again, I want you to keep notice, there's no directional puts throughout all of this flow. It either is call buying like this $1.1 million 420 call about at 403 for the 131.25 strike, or it's call selling, which is mostly monetization of those calls. Like I just said, they bought in the previous day. So nothing is directionally bearish about this flow at all for the last 2 days. And it really is just that common theme as you scroll all the way up here of just more and more either call buying or just call monetization overall. So again, nothing super directionally bearish at all. Really great to see this upside move on Friday. And that brings me to the next point. After I see that the flow is complementary to a bullish outcome or bullish thesis, then I want to develop my own trade thesis so I can trade it in the following week, which is what I want to do in the coming week. So first of all, we know that we're in a downtrend. So technical wise, I need to figure out where that downtrend trend line is. In this case here, we can see very clear downtrend from the high pivot over here on December 18th to the next rejection spot, or 2 spots that is. We can see this is where the downtrend is. So we're still a little bit away from where that downtrend level is. It's around 426, give or take, depending on when we hit it. But this tells me the best possible setup, at least in my opinion, is to trade the downtrend break. So what that would entail would be something like this week, maybe we open Monday and then retest this 404.79 level that I have, and then bounce from there and kind of make our way up to this level. Well, I'm waiting for it to go all the way up to this level, waiting for it to break above the level with an hourly candle confirmation close. And if it can do that, then I would add on that hourly candle confirmation, and my risk would be an hourly close back under the candle. So this is confirmation-based trading. It makes it a lot simpler in terms of an execution standpoint because I just have to wait for candle triggers. So I'll wait for it to close above. If it does, I add the position and then my risk is automatically a close back under. As long as it can stay above though, even if we just retested this candle or the trend line that is, and we can see it bounce from there, then I'll continue to hold that position to future targets. The main target in this case would be 455 to 460 because of this known supply zone from over here. This was a multi-rejection spot. So that would be my target if Tesla can break above this trend line. As long as it stays below, I'm not really interested in trading it that much. I know that there's a lot of momentum, as I said earlier, with this huge 8% update that we saw on Friday, but I'm not interested in trying to add it just because it had this 8% update. I want to find good risk reward, a good high probability setup based on technicals, based on flow, tie it all together and then execute accordingly. And personally, I find this over here to be the best possible setup just because we know this is a valid downtrend. If it can break above that downtrend, then there's a high likelihood it has continuation all the way up to my target. So this is the trade that I'm waiting for. And even if it doesn't happen the first 1, 2, or even 3 days this week, that's fine. I'm willing to wait because again, I go for quality over quantity. In this case here, even if we don't hit it Monday, which is super unlikely we would hit Monday, that's fine with me. I'll wait, weather the storm, and look for my entry trigger. There is a potential setup off of 404.79. I just don't consider it to be as high probability as a downtrend breakout. And this is a bit simpler, again, from an execution standpoint, because I'm waiting for candle confirmation for both my entry and my exit if I need to stop out. Otherwise, I can continue to hold as price appreciates. So that's the plan for this week on Tesla. And something interesting with that, like I said to you early in this video, Nvidia is very similar from a momentum perspective. Look at this here. It broke above its own downtrend. Starts from up here. You can see resistance, December 5th or so of 2024. Another resistance over here, another resistance, and we finally broke above it on Friday of last week. And so far, it stayed above that downtrend. Not only that, there's also a valid inverse head and shoulder. And not only that, we're above a previous range-based demand zone, which is this green bar that I have over here. This is the supply zone over here of the previous range, and this is the demand zone. We traded within it for a bit. It broke down below it. We rejected numerous times, but now this breakout move above the downtrend is the first time we're also above that demand zone over here. So there's three bullish factors here. We're above the demand zone, we're above the downtrend, and above and slash breaking out of this inverse head and shoulder pattern. All of those are very bullish signs. I'd say minimum target would be around 148, 149, maybe even 150. So the upper end of that previous range. If you can get above 150, this thing can skyrocket a lot higher. So a lot of potential here in the short term to get to that 150 level, but then also potentially mid to long term, if it could get above 150, you're looking at a pretty substantial breakout continuation much higher. So two potential entry setups here. The first one, which is my favorite, would be adding on a downtrend retest. So we know this is a valid downtrend. We know we broke out above it on both the daily and the weekly candle to reclaim the range as well as the downtrend. So as long as it can hold above, we're looking at bullish opportunities to add either 141, top of that demand zone, which has been vetted before with rejections from over here, as well as support from over here. But not only 141, if it were to fall through that and go down to around 139, there's a beautiful risk reward setup at that downtrend retest. I love trading downtrend retests just because risk is super mitigated with a lot of potential reward, as you can see with this rough sketch here. Because if I add around 139, my risk is automatically an hourly close back under that trend line. You're looking at about 2 or 3 points, versus if it were to bounce from here, you're looking at about 5, 6, 7 points of upside in a very short period of time, with that eventual target of 150, which would be 10 plus points. That's beautiful risk reward, all things considered. So I'd really like to see something like this, but maybe add something like one half at 141 in case it bounces, and then the other half over here at 139. And then again, my trigger to stop out will be a break under. Regardless, as long as it can stay above, we look at that upside move. But really like Nvidia, really like Tesla, both of them high momentum so far. And yes, I completely realize that these are up quite a bit over the course of the last year or so. However, I'm just looking at it from a short-term basis of both technicals and the flow, and both are telling me that this is bullish in the near term. So I'll plan on trading on that. Wouldn't look any further than February or March because we can't really look that far based on this setup specifically. But in terms of January, I like what I see so far. I wanted to share it with you guys in this video today. Regardless, I'll see you next time.